Hey guys, Mike here. So, oh boy, what a green day it was on Friday, and it wasn't just semiconductors this time. Tech, right? Continues to churn up. The Qs actually did do something, and I don't think a lot of people would have expected this soon, but we're going to go into that and also what it means and stuff. But, this is another jam-packed video because there's stuff going on behind the scenes, if you missed it, with all the data that came out. That the market's trying to prepare itself for, and it's going to be interesting to see how this plays out for sure. But I tell you what, I don't know. When we went through 2020, I didn't think I'd get that feeling that you got back in 2020 anytime soon for like another decade at least. But there are things happening behind the scenes that are pretty much making a comeback now that was happening in 2020, early 2021. Because I got like an offer to do something, and I haven't seen those offers in a while, right? And you got these all the time in 2020 and 2021, you got them, but they kind of went away, and now they're making a comeback, right? And you're thinking, wow, really? Now? And so I'll let you in on that. I never, ever talk about that or show you this, but I'm actually going to show it to you, what the offer was and stuff, and what, I plan on doing. But yeah, it's just amazing to see that stuff. And obviously right now, this is what's happening behind the scenes with the markets kind of going, okay, wow, look at that. I mean, now all of a sudden, coming up here in a few weeks, they have a 64% chance that the Fed is going to raise rates. And you're like, wait a minute, what just happened? Because it was down the other day. Well, what happened was all the economic data came out, and guess what? Consumption, right? This is PCE. This is what the Fed really likes to look at. Well, it came in higher than expected, right? And so, this is important. And you see right now, you can't really see it on this one, but it literally ticked up on this. But more importantly, look at core. Like core is just stalling big time, like between 4 and 5, right? And if you're wondering why the Fed likes PCE almost more than CPI, it's because CPI obviously only takes in urban expenditures, and PCE takes in a lot more. It takes in urban, rural, and third-party expenditures. So keep that in mind. That's why they really like it and stuff. And so that didn't come out so well. But then also, what else? Here we go, guys. Guess what? We're making more money, and we're spending more money because personal income came in right as expected, right? Still increasing. But then personal consumption came in twice as much as expected. As you can see by that big pop right there on the right, the bottom part. And so again, still making more money, still spending more money, even if it's on credit cards. That's what we're doing, right? And that's what's going to be a problem when you're trying to fight inflation, because there is no pushback on a lot of these companies. Now, if the Fed does raise rates, let's say in June, and let's say they're raised in July or whatever, what sector do you think that's going to affect the most, right? Is a big question. Well, a lot of people say banking. I would say, as I continue to update you on this, the mortgage industry, right? The mortgage industry, obviously the rates are highest since March. They ticked up again the other day, as you can see right there. And then look at applications, right? Applications, I mean, if you just go back, it's just a mess. But they dip down, shocker there. Anytime they go up this high, they always dip down. But check this out. 3 years ago, a 30-year mortgage rate was around 3.15%. We all know that. Average home price about $369K. Today, 30-year mortgage, 6.57%, depending on which one you're going into, and an average home price of $501K. That results in a $26K increase in the down payment, right? I'll say you're doing 20%, which most people want, I don't think, and a 101% increase in a monthly payment. And in my area, this is true, and I'm going to talk about this in a minute. But if you look right here, this chart, I mean, this is absolutely insane. Look at, I'll go where we're at in just a minute, but look at back in the 70s and 80s, right? Mortgage rates were like 18% or something. You can see what it costs to buy versus rent is the white line, right? Then look at 02 to 06, that big financial crisis right there, the real estate bubble. You can see it was way more expensive to buy than rent. And then look at now. Look at that line. Straight up. And before we continue, guys, if you're getting anything out of this, please hit that like, subscribe button. I really appreciate it. And think about sharing the video. And if you like the content, think about subscribing. And I challenge you to go online in your area and see if this is true. In my area, I fact checked this. This is absolutely true. They just built some brand new, beautiful apartments down the road. They also built some like townhomes you can rent and stuff. And I looked at those rents just the other day, and they're actually a 3-bedroom, 2-bath is $400 to $500 less to rent than it is to try to buy a home in the same area that's a 3-bedroom, 2-bath house. And so let me know, if that's the case in your area, what's happening and stuff. And so that leads me into, real quick, 2 different charts here, which will show you the difference in what's happening in this market. And then I'll go into that offer I got, right? And so, if you look here, you got the Qs, right? The Qs, look at that candle. I mean, that's just an enormous candle Friday, right? Still got that gap below, but what did it do? And so much, by the way, for coming down challenging that trend line right there. It ends up breaking, not just meeting, but breaking the April high right there. And if you go on the 3-minute chart, you can see it broke above. I thought it would get rejected, but it didn't. And so now it's trying to do what? It's trying to go ahead and do a support resistance flip, right? And so we'll see if this holds this week coming up. But if it can do that, you go back over here, all of a sudden you go, well, dang, I guess those March highs are, I guess they're right above it. So, hey, that puts them in, the sights, right? But also pay attention to this right here. We're going to get a pullback at some point in time because look at the 200, guys. Remember, this is a rubber band. We are 19% above the 200-day moving average. I went back and looked, and yes, there's been instances where we were, above this. This is an index, by the way, not a stock. And so for an index to get this far stretch, and normally, if I want to look back in the past, about 8 to 12% the Qs would get above their 200-day. In a regular time frame like 2010, 2019, as I'll show you, it would come down and touch it multiple times, right? And if you just go back, but there has been instances, obviously, especially during 2020, where we got stretched well above, right? Like this one right here, I believe this right here is 34% above, right? This is 2020 though. This is when all the checks are rolling out and everybody's going in. But look what happens when it gets so far overstretched. What happens? Even during, roaring times, it went down 15% very quickly, right? Because it's a rubber band. And so as the 200 moves up, the Q should come back down and at least get close to meeting it. But you can see there in 2020, it didn't touch the 200-day moving average for over a year. That's not normal. But also, keep in mind what's going on in the market here. Look at the IWM, the exact opposite. It can't get above its 200-day and stay there, right? It hasn't been above the 200-day since, what is that, like February? And so even when it gets above it, it comes right down below it. And so it's just 2 different markets going on, right? One for large caps, one for smaller companies, small caps, right? And this one usually trades, somewhat close to its 200-day moving average, except what you saw in 2021 when it got super overstretched. But it stays that way just because it trades sideways in ranges for such a long period of time. And you can see we hadn't had the Qs actually outperform the Russell this much since 2020, right? When we were getting all the free money. And so it's been a while since the Qs have done this, but they're getting so far overstretched. And the reason why they're getting so far overstretched, which I'll talk to you about in just a minute, is just because of simply it's 8 to 10 stocks. That's just the way it is, right? But before I get into that, I did want to show this to you again. I never show this stuff, but when I had this offer put to me, I was sitting there going, really? I was like, God, I hadn't had to go through these offers since 2020. And in 2020, you got them all the time. And it's to do with doing videos about a publicly traded company, most likely more like a penny stock or a stock that's got a low float, very low price to it or whatever, one you can really try to push up and stuff. And so when I saw this, I was like, oh boy, you gotta be kidding me. And I've been getting a bunch of these recently, but I'll show you the email, and I got this one that says, hey Mike, we've been following your channel, blah blah. On a monthly basis, we allocate 6 figures to sponsorship budgets for our content creators. And we like the opportunity to discuss what a role you play in such a partnership. We'd be more than happy to provide more details over a call, blah, blah, blah. And so, of course, I emailed back. I said, yeah, I'm familiar with a dedicated video type sponsorship. This is me kind of feeling them out here, right? But I've never done one for a publicly traded company, which what I'm assuming you are targeting. And, of course, I give my demographics, all that good stuff. And I said, well, I've never done one of these, so just send me the rate, right? That's what I want to do. I want to say they'll send it to me. 99% of them will not send it back to you. I don't know because they just don't want it in an email form or what. And then, of course, they email me back and say, okay, well, yeah, I've checked with management and we'll give you $5,000 for this dedicated video. And then if everything goes well, we're willing to up the rates. Now, I'll let you go ahead and determine what you mean by up the rates. And understand this video, you're talking about a 2 to 3 minute video, 5-minute max. You don't even have to do any research. They send all the research to you, supposedly, and then you put it in. All I got to do is talk, right? So it'd be, at most, me editing and everything else, like an hour's worth of work for $5,000. Not bad, right? Not many jobs you can do that for, right? You know, and understand the part about if things go well, right? But in 2020, what was going on? There were many channels that were literally sitting there getting stocks and crypto, and they were putting them on their channel to pump them. But what they would do was, just so you can see behind the scenes here, they would actually get the company that was paying and would also give them the crypto or the stock as well, right? Or they would just go and buy it on their own before they did the video, right? And then they would do the video, and they were on the stock, and then everybody watching the videos would run in and they would pump it up, and then of course it would be a dump. That's what would happen. And I don't call it that because we're not expecting it to dump, are we? Right? But seeing these come out again, you know, it's like, really? Like, are we seriously in that time right now? But the reason why it's happening is because what do you see on the companies they're looking at? They're in the dumps, right? Everything, I mean, you look at small caps, micro caps, I mean, they are down a bunch, right? 80, 90%, some of them down 99%. And so that's the environment we're getting back in right now. I mean, you can see the euphoria, all this stuff is happening. And so it's the perfect time to, you know, I guess capture to whatever you want to do. Now, of course, am I going to do it? No. Right? To me, you know, there's no price tag on my integrity or whatever you want to call it. You know, I just don't believe in doing that. And then, like I was telling, you know, my wife or whatever, you know, she was telling me really, when she was saying, you know, there's so many channels right now. I don't know if you notice this. I mean, huge channels. Been around a while, right? Millions of followers, right? You used to get 100, 200, 300,000 views on their videos. They're dying, right? They're just dying. I mean, literally, you can same videos now are getting like 20, 25,000 views, 30,000 views, which would be a lot for my channel because it's a small channel, but they're huge, right? But I think the reason why that's happening is because, you know, what were they doing all the time? Sponsorship videos, pumping stocks and doing kind of stuff like that. And people just got to where they just didn't believe in it anymore. But they weren't really, I don't want to say they weren't being honest about things, but they were just doing stuff that just wasn't cool, right? I mean, people just didn't trust that. And on this channel, may not be the most exciting channel, but I try to be honest and put it out there, trying to find data for you guys. And trust me, I'm a one-man show. This is a lot more work than you think that goes into this, but it's a lot of work and it's nonstop, right? And so I try to do that, and I think hopefully I've succeeded in doing that. That's why people return to, you know, see the videos and stuff and try to get something out of it and everything. And I think other channels just didn't do that. And so, no, I'm not about to sit there and do whatever they want to. I call it a pump and dump video, you know, allegedly, of course. But, you know, I'm not going to do that. But that's, to me, that's the kind of market we're going back. We're in or trying to be in again, stuff like that. And so, you know, I saw something the other day. It was talking about some meme coin. What do you see going on with meme coins? They're doing those pump and dumps again, going up 10,000%, dropping 5,000% and stuff, you know. So I didn't think we'd be back there so soon. Let me know in the comments what you think and stuff. But that's where we're at. Right. And, you know, speaking of equity markets, I mean, here's what's happening, guys. If you ever wondered, the equity markets in general are worth 107 trillion globally. The United States makes up about 44 trillion of that. So a lot. Right. And I think we make up like 41% of the whole market or whatever in the world. But look at this. The top 10 largest stocks in the world are now worth a combined 13.6 trillion. But more importantly, what I want you to do is take out the Aramco and take out Taiwan Semiconductors, which take out about 2.5 trillion. And that right there would put, obviously, this right here around 11 trillion for these other stocks. So that means 8 stocks actually make up 25% of the total market right now in the United States. 8. There are thousands of stocks traded every day in this country. And 8, right? That is just mind-boggling. Even if you take the 10, I mean, my goodness, 10, whatever, you know, what is that? So that's going to be, or what, 11%? I'm just doing the math in my head real quick, of 107 million. Like, so just 10 in the whole world make up 11% of the whole market. In the whole world, right? But just look here, 25%, 8 stocks. Wow. Now, I don't know what you call it. I don't know if you call that a bubble, or if you just call that just what's going on. Like, and I'm sure it has happened sometime in history. Maybe. I don't think it's happened in the 21st century, right? But, you know, maybe it has, if you know of any other time. But that is just mind-boggling. And the reason why it's important to know that stuff, here's why you use it. Use it. Use it. How do you use it? You go, look, eventually, you know, the quant funds, hedge funds, the computer, all that stuff, the risk reward, more importantly, the reward you're getting out of keep piling in, because trades get really, or not trades, but investments, we'll say, get really heavy. Like when everybody's heading into the, everybody heading for the exit, right? At some point in time, you want to peel off and go the other way, okay? And so there's going to come a point, I can't tell you when it is because we're in this euphoric state, it feels like, but when it happens, there's going to be this shift, and not saying they're going to pull out all those positions, but they're definitely going to start taking major profits, right? One starts taking, then two, then three, and that's going to trigger a whole bunch of stuff, and they're going to shift that money into the beaten down stuff. That's just the way it always happens. And what's beaten down? Small caps, micro caps, right? Now, the problem is in this environment, those don't perform well, right? But as we've learned, fundamentals are out the door, right? These are machines that are looking for momentum. They're looking at, all kinds of different stuff. Like one said they do macros at the very top or whatever, but they do the charts, they do all this stuff. And so that's what they're looking at. And that's why you'll see these companies who have no business being up 100%, up 100% in 7 days or something. And you're like, what in the world? Nothing fundamentally changed at all, right? But what changed was their charts. They went, oh, look at this right here. They've been consolidating for 6 months, and they're about to come out and break this support line and do all this other stuff, and they're picking up momentum. And then all it takes is a couple quant funds to come in with some millions of dollars, start pushing them up, and then other funds start falling in, and everything gets triggered, and you go, oh, look at this right here. And so that's why it's important to keep up with this and understand when you start seeing investments or trades, whatever you want to call them, getting real heavy on one side and everybody's leaning this way, right? And so you got the scale, pretend I'm a scale, right? And it's like this now because everything's in these stocks. Oh, and you go, what's on this part of the scale, right? It's going to shift back. That's just what's going to happen. Can you time it? No. But there are certain things you can do, right? And put in the comments what you think they are, right? That you can do to prepare for it and be set up, and that's where you're going to make your money. Anyway, just want to put that out there to you. Tomorrow we'll have the setup video with a lot more charts because there's, again, a lot of companies are starting to come into, a lot of stocks come into a heavy support areas and stuff like that and getting really overstretched. And so we'll talk about that as well. But, again, appreciate all you guys' support and everything. Love you to death. Can't thank you enough for allowing me to do this, actually. So you do that. And so I really do appreciate it. And hope you have a good rest of your Saturday. And I'll see you tomorrow.